Hello, I'm David Chaston with 98.9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, Europe has grabbed the spotlight overnight for all the wrong reasons. First, however, the latest PMIs for the US show a solid start for 2019, helped by faster manufacturing output growth. The service sector, however, is slipping and at a 4-month low, although still at a moderate level of expansion. In Canada, there are signs of household spending is falling fast. Overall retail spending is in slight decline, but the strong growth in the number of households, analysts are concluding that per capita spending is shrinking. The situation in Europe is not so positive. A similar PMI survey shows business growth close to stalling at a 5-year low in January, with expansions of both the factory and services sector barely noticeable. New order flows are showing a worryingly downward trend. Overnight, the ECB reviewed its policy settings and left these unchanged, but Mario Draghi acknowledged that economic growth in the Eurozone was likely to be weaker than he expected, due to factors ranging from China's slowdown to Brexit. And the euro weakened, but European equity indexes generally rose about 0.5% overnight, except for the London index, which fell 0.4%. And that's following Asian stocks rising a similar amount, that's 0.5%, again except for Tokyo, which was unchanged. Today, Wall Street is down 0.3% in midday trade. In the UK, business frustration with the Brexit situation is boiling over. From car makers to aircraft production, companies seem to have had enough, and the risk of a mass pullout of the UK seems suddenly higher. In Germany, their government cut its 2019 growth outlook to just 1% from 1.8% forecast just 6 months ago, due to the weak global demand and the Brexit uncertainty. German growth will pick up again in 2020 to 1.6%, they now say. In Australia, ASIC has sharply criticised the big accounting firms and the stubborn conflict of interest between their audit responsibilities and their lucrative consulting businesses. They say in some cases auditors have compromised even the appearance of independence. And the rate rises keep coming out of cycle in Australia, with the NAB, the latest to push up variable mortgage rates, rises of about 15 basis points. They're the first major to move, following 2 challenger bank moves earlier. The US Treasury 10-year yield is sharply lower today at 2.71%. Their 2-10 curve has slipped to 15 basis points. Gold is down $5 an ounce to $1,280 an ounce. And US oil prices are a little higher today, and just on $53 a barrel, while the Brent benchmark is just on $61 a barrel. The turmoil in Venezuela is keeping prices up, even as US petroleum and crude oil stocks rise. And the Kiwi dollar is marginally softer at 67.7 US cents. And the cross rates are up again against the Aussie at 95.4 Aussie cents, or also firmer at 59.8 euro cents. That leaves the TWI at 72.1. I'm David Chaston. That was 98.9, brought to you by interest.co.nz.